So to cut the long story short, are we in a recession? The answer is hi everyone, welcome to today's video. So Elon Musk has predicted that we are moving towards a recession. Okay, so now you might say that Elon is an alien. He probably will himself become a robot one day. So why should we take him seriously? Alright, move on. So let us look at the commentary of some of the prominent investment banks across the globe, and Deutsche Bank has predicted that we will be heading towards a recession. Now you might give another counter argument that investment banks are very masoom, they don't know much, etc, etc. So on this video, we are going to analyze that are we in a recession or are we heading towards a recession? Second, we are going to talk about that how severe this situation is. Third, can something be done to prevent this situation and how to overcome fast from this situation? And finally, what is it that you and I as individual investors should be doing in this climate? So let us get this discussion started. Also a very quick shout out to our sponsors for today, which is Ditto. I have personally purchased insurance from Ditto. They are a wonderful platform. You can go and speak with insurance experts for free. Please check the link in the description box and you can utilize that link to schedule that free phone call. Buying insurance is super complex, so do speak with some insurance expert before you purchase an insurance, and it is absolutely necessary in this type of a macro climate to have an insurance. So let us get the discussion started. First and foremost, let us analyze very quickly that are we in a recession or not. So what exactly is recession? So let us look up the dictionary meaning of recession, and in simple terms it means that there is some kind of an economic slowdown quarter after quarter for at least 2 successive quarters, and if that happens we are in a recession. So has the world slowed down? The answer is yes. Now let me show you slightly more worrying data which is around the forecast. So IMF predict that the world's growth rate in 2022 will be roughly 4.5%, and in 2023 it will slow down further to roughly 3.6%. So the growth is slowing down all across the world. What about major economies? Yes, again it will slow down. That roughly there will be 4% growth in the US. Then it will slow down further next year to 2.5%. Same goes for almost any country on earth except for China. China is the only major economy in the world whose GDP might grow by next year. All the other economies are going to suffer. That is what IMF's data predicts. Okay, the world growth is slowing down. What else? Can we look at some other data? The answer is yes. Here we move to a second data called as yield curve inversion data, and this is a fairly important data. It's highly complicated, so I'll break it apart in very simple, easy to understand language. What inverted yield curve means? So yield curve inversion simply means that the return on short-term debt is much more attractive compared to the return on long-term debt. Now, if that happens, it is called as a phenomena of yield curve inversion. Now, important point to notice that there is a very strong correlation between yield curve inversion and the recession that happens in the economy. Now, according to a study, yield curve inversion has taken place 28 times from 1990, and guess how many times recession has taken place afterwards? 28. So there has been a very strong correlation between these two data points, and therefore this yield curve inversion scenario is worrying the world. So to cut the long story short, are we in a recession? The answer is yes. We are already in a recession. I don't know why people are talking about the fact that we will be in a recession. We are already in a recession. That is not the case anymore, that we will be heading towards a recession. It is just that how severe this situation will get moving forward. So for this, let us understand the severity of this recession. Now the problem is that people start panicking the moment they hear the word recession. That okay, Akshat said recession is there, or XYZ person said that recession is there. Let us sell everything and go away from the market. Please don't do that. That is not the right approach of understanding this point. Recession simply means a slowdown in the economy. So just because the economy is slowing down does not mean that everything is going bonkers, right? So that is not the correct understanding. What people end up assuming when they hear the word recession, they confuse it with depression. So depression is a more severe form of recession that has taken place in the past, during which the economic growth has stalled quite dramatically. So let me speak about the most famous instance of depression, which was in 1930s, and that period was called as the Great Depression. Now during that time, the GDP of the US contracted or shrunk by almost 50% shrinkage. Additionally, the stock market took roughly 15 years to recover from that point. So that is how bad the situation of depression was in the 1930s. An easy way or an easy example to understand the difference between recession and depression is that imagine that you are working at a company and unfortunately your salary gets cut. So that is recession. You will go on LinkedIn, you will criticize your HR, you will throw some HR jokes and have fun, all that stuff, and tell him khari khoti. So that is recession. But unfortunately, if someone loses their job, that is depression. So that is a bad scenario. So I hope that through this simple example, you clearly understand the difference between what recession is and what depression is. So people are getting confused. People are creating a lot of ruckus. This recession is going to turn into depression and bad stuff is going to happen in the economy. No, that is not necessarily true. We need to do further analysis as to what extent this situation can get worse. Now, in order to assess that how severe this situation of recession is, everyone will give you their own commentary. If you go and speak with Elon Musk, he will have a different viewpoint. If you go speak with Bill Gates, he will have a different viewpoint. If you speak with politicians, they will say that, hey, what recession? There is no recession. There is only growth. There is only vikas. There is only pragati. There is no such thing as recession in my constituency. But here is some rational data that you can use in order to assess this situation a little bit better. So take a look at the GDP per capita of the world and how it has grown over the last 1 decade. Now, GDP per capita simply means that how much money per person exists in the world. If you take a look at this data, you will clearly see that between 2010 and 2020, there has hardly been any growth. Last 1 decade of GDP per capita growth has been flat. It has been absolute zero. This simply means that GDP on a world aggregate level that has not grown. So this is the first key data point that you must remember. The second key data point that you need to look at is the GDP growth rate of a particular country. So let us pick the example of India. And here in India, the GDP over the last 10 years has grown. So there has been no issue in terms of overall GDP growth. Some years the GDP has grown by 8%. Some year it has grown by 7%, 6%. Recently it has started to come down. It also became negative in one of the quarters of 2020. But the bottom line is that over the last 10 years, the GDP of a country like India has gone generally up. Now, if you aggregate the first data point with the data point that I just told you, what can you ascertain? You will ascertain two very important aspects here. One is that there is asymmetric growth that is happening in the world. Why? Because if the world overall GDP hasn't increased, but the GDP of some countries like India or the US has gone up, what does it show? It shows that some parts of the world are getting richer and many parts of the world are getting poorer by the day. So there is asymmetric growth that the world is exhibiting. This is serious concern for the world at large and especially for countries like Pakistan, Sri Lanka, Afghanistan, Nepal, which are literally driving themselves to the ground. Now, the second key important takeaway from this is that the world has been very resilient, that over the last 10 years, a large part of the world hasn't grown, but some countries have exhibited growth. Now, going forward also, such a scenario might replicate. Now, I can't comment whether a particular nation will grow or not, but you as an investor should be aware of 5 key development points that can help a particular country navigate recession. So I have studied a lot of data to come up with 5 specific points as to how governments across the world navigate the recessionary issue. And if you understand this point, then you can probably pick geographies where you should be making certain investments. So first and the most important tool is that they print more money. This is something that I have spoken about multiple times on my YouTube videos, and this is a roadmap that has been followed quite aggressively since 2008. Now there is a limit to which a country can print money. It can't print insane amount of currency too fast. Otherwise it will get into a US-like situation where despite being a developed country, its inflation is much higher than what it is in a developing country like India now. So such a situation should not have reached in the first place. US can still handle such a situation because it is a massive economy with massive clout and reserve currency. But many other countries can't do this. But this is an important tool and a lot of countries print insane amount of money. They play around with the interest rate and mostly they cut interest rate to overcome this problem. Now, unfortunately, this first step is almost played away with, because the world is not looking to print insane amount of money from this point. Yes, there will be periods when governments will print more money, but this quantitative easing game has been maxed out in my opinion. Now, the second key measures that the governments undertake in order to boost up the economy is that they increase public spending. Now, is it going up in India? Is it market going down in India, this is a very dicey situation. India is playing the wait and watch game, which is okay, which I don't think is a good thing or a bad thing at the moment. But keep an eye out for this data that if the public spending goes up, it's a good sign in a slowing economy that your government is spending money intelligently. Now, the third point is slightly contradictory, that in a recessionary environment, taxes should be cut so that public can undertake more expenditure. But if the taxes are cut, then how will government spend more money without printing too much cash? So that is a situation where the world has gotten stuck, that these 3 points together are not working in consonance. So for this, what needs to happen is that the world needs to increase its productivity and be on a lookout for countries which are spending a lot of money on innovation. I am very bullish about Middle Eastern countries at this juncture. The rate at which they are implementing digital innovation, attracting entrepreneurs, focusing a lot on transforming their economy, that is massive. Unfortunately, India here is not on the right track. There was an article that was written by Dr. Raghuram Rajan as well, who was the previous governor of RBI. Now, I'm not trying to make this political. Please don't start political debates in the comment section. It was a sensible article which simply spoke about the fact that India should not go gung-ho in terms of its manufacturing. It should rather focus on its service sector. That was a very sensible suggestion. A lot of people criticize Dr. Rajan, but it shows that our country's focus in terms of economic growth from a goal-oriented point of view, that is not on a right track. I'm giving you partial information here because I'll make a complete video analyzing this particular topic. But for the time being, please understand that we stand to get much better if we focus on the service sector growth vis-a-vis the manufacturing growth. Why? Because the service sector has the potential to add much more to our GDP and increase our nation's productivity. So, nations that are improving their productivity these days, I'm very, very bullish about UAE, Singapore, and I'm also very, very bullish about something like Estonia. Why? I'll have a separate discussion on that as well. But the bottom line is that countries should focus on increasing their productivity. That is the only way of accelerating sustainable growth. Then fifth and final point is that the private sector should not shock the economy. It should not be as if that they have stopped doing investments or they have fired too many people. Now the situation in India looks somewhat stable. Yes, a lot of startups have fired employees, but net the situation in India does not look bad. So what is the conclusion of these 5 points in context of India? So definitely the fundamentals are not bad, but our long-term vision in terms of increasing our productivity, that is not in the right place. Now, of course, I am entitled to my opinions the way people are entitled to theirs. That is my opinion based on the data that I am reading. Now, of course, situation can change going forward in the future, but there are a lot of lacunas. So the word of the day today is lacuna, and let me know what does that mean. So there are a lot of lacunas in terms of enhancing our productivity game. That is the simple message that I want to give out. Now comes the fifth and final point, that what you should be doing in this recessionary environment as an individual investor. So I will leave you with 3 important messages here. First and foremost, please secure your health. Please create an emergency fund. Please buy an insurance. It is very, very important because you don't know how severe this recessionary situation can go depending on a range of other macroeconomic issues. Second key point that you must remember is geographical diversification. The more I'm reading about the world, the more I'm getting a sense that now it's time to diversify your portfolio geographically, and you must understand about different growth economies and try to build positions there. Just exposing yourself too much in one country might not be a sensible move anymore. People often give the argument that, you know what, if you would have just invested in India in the last 20 years, you would have made a lot of money. Agree. But a large part of India's growth over the last 30-40 years had come due to the world growth and general peace that has existed in the world. That is not the roadmap anymore. So going forward, my understanding is that strong economies will exist in pockets. There will be several good options to exist, and India hopefully will be one of those destinations, no doubt about that. But we as individual investors should diversify our base and investment portfolio across different countries. Then comes the third and final point, that depending on the growth parameters that I spoke about, look at the countries that are well poised to navigate this slow growth recessionary phase. So according to me, these would be countries that are taking a slightly longer term view, investing in productive assets. So if you get an option to directly invest in those countries or work in those countries, I would highly encourage you to explore those options. That is precisely what I am also doing. I will keep you posted, but I hope that you enjoyed this discussion, and I will see you the next time.